Hey guys, it's Sasha. I get asked a lot of questions by people who are new to investing about the stocks and shares ISA. Now, I took the 9 most popular questions out of these and I'm going to go and give you the answers. I'm going to tell you exactly what some of these things mean, exactly how some of these things work, so that people can understand stocks and shares ISAs a little bit better. But just before I dive right in, a really brief disclaimer. I am not a financial advisor. I can't provide financial advice to you, and if you do need financial advice, please make sure you go and seek the help of a suitably qualified professional. So, question number 1, how does the annual allowance work? I often get this question and I'm going to start with it because all ISAs, including stocks and shares ISAs, have a combined £20,000 limit. But the people that don't quite understand it often ask the question, what if I put in £10,000 and then the value of that investment doubles, for example, to say £20,000? Does that mean I can't put any more money in? Well, the limit on ISAs, this is applicable to all different kinds of ISAs, applies to the deposits only. It doesn't matter how much your money grows. So in this example, if your £10,000 grows to £20,000 or even £100,000 in value, you can still go and make another £10,000 deposit during the same financial year for a total of £20,000. Remember, you can go and deposit up to £20,000 during any financial year that runs from the 6th of April one year to the 5th of April the following year. And it doesn't matter how much that investment grows, the next year you can go and do exactly the same thing. Now, which brings us nicely to, do I pay tax on any amounts over £20,000? Now, most people continue to be a little bit confused by this limit. They kind of think that maybe this limit applies to what the tax-free portion is, and anything over that, you're going to have to begin paying taxes on. Well, the simple rule is, no matter how much you earn from dividends or how much the growth and value of your portfolio is, you will have to pay no dividend tax, you will have to pay no capital gains tax on the investments made inside a stocks and shares ISA. So however much you invest per year up to the £20,000 limit, it doesn't matter if it grows to £1 million in value, you will still have to pay HMRC absolutely nothing when you decide to cash in. The next question is, when can you withdraw the money from a stocks and shares ISA? Now, you can withdraw money from stocks and shares ISA whenever you want, but there are a few caveats. If you make a deposit and then make a withdrawal from the ISA, with most providers, you're actually going to be losing that amount of tax-free allowance. So for example, if you're going to deposit £15,000 into an ISA and then withdraw £5,000, leaving net £10,000 in that account, you will essentially lose that £5,000 because you'll only be able to make another £5,000 deposit for a total of 15 out of the £20,000 allowance you have for that year. Vanguard and IG are 2 companies, I think maybe some others do as well, but I know that they offer flexible ISAs where these rules don't apply, and you're allowed to go and make a deposit back up to any amount that you've withdrawn during the financial year, which is a little extra advantage, although they have some disadvantages versus other providers as well. And one other thing to remember is, if you do need to make a withdrawal, you will have to wait 2 business days from when you actually go and sell your positions to when that money is possible for you to withdraw from your account, because that's how long it takes to actually settle those transactions. And even then, expect to take a few business days from when you actually process a withdrawal until the money lands in your bank account. So expect at least a week from the moment you're trying to begin doing a withdrawal until the money is actually available to use for whichever other purpose. Question number 4. Do you have to file a self-assessment or any kind of report to HMRC if you're using a stocks and shares ISA? And the answer is no. You do not have to file a self-assessment. You don't have to do absolutely any kind of tax reporting to HMRC if you have all your investments inside the stocks and shares ISA, unless there is another reason why you do have to go and do them. There is no obligation to do any kind of calculations. You don't have to calculate capital gains. You don't have to do anything at all. You get to benefit from all the growth in your portfolio and all the money that you're going to be able to earn without having to do any of the paperwork. That's one massive benefit on top of the tax-free benefit as well. Question number 5, how do I get a free share? Which is a really good question. I'm really glad you asked, because Trading212 and Freetrade both offer a free share if you go and use my link in the description below for signing up to your account. You can get the free share worth up to £200 with Freetrade or up to £100 with Trading212, although Trading212 right now are not accepting new customers. However, I am currently using the Trading212 ISA, and I also think very highly of Freetrade. I use their non-ISA account as well. Remember, the Freetrade ISA, if you choose to go for that one, costs £3 a month, whereas the Trading212 one is free. So you can go and check them both out if you're interested. Can you keep cash in a stocks and shares ISA? This is a question I've been getting a little more frequently more recently. And the answer is yes. When you make a deposit, the money goes into your account and it sits there essentially as cash when it first arrives. You can then go and take that money and invest it in various stocks and shares, ETFs, whatever it is that you want to buy. And at any point in time, you can go and sell out of those positions, and the money will continue sitting as essentially cash within your account. It doesn't do anything. It doesn't earn you anything. There's no benefit for it being there, but it does sit there. Although with Freetrade Plus, which is a £10 a month account, which is really expensive, you do get 3% interest paid on it as well. But if you want to, for example, make a deposit at the end of the financial year and you're not quite sure what you want to invest in, or you just want to put the money in to make use of the tax advantage, but then want to make a decision on what to invest in at some point later, you can do that. The time limit in terms of the financial year is not on making investments, it's on making the deposit into the account. So the date on which you put the money is what counts, and what you do with it after, whether you sell, whether you buy, whether you keep it sitting as cash doing nothing, it doesn't really matter, it's up to you. Question number 7, do I have to pay any other taxes? And if so, how do I go and pay them? Really good question. A stocks and shares ISA means that you don't have to pay any capital gains or UK dividend tax on your investments. Those are the two big taxes associated with investing. But you still have to pay some other taxes. First, you have to pay the US dividend withholding tax, which is 15% for UK residents, and that has to be paid to the US Inland Revenue Service on any dividends that you earn from US-based, US-listed companies. Another one is UK stamp duty. Every time you go and buy a large UK company that's listed on the London Stock Exchange, you will have to go and pay 0.5% as a UK stamp duty for the benefit of being able to purchase those shares. You don't have to pay it when you sell. Now, some other European markets also have similar taxes to that stamp duty, although it is quite rare to actually find companies that you want to invest in. The majority of people probably will never actually invest or only have maybe one investment in companies that are on those markets, so you're unlikely to actually come across that. But the good news, after saying all that, is that you actually don't have to do anything. All of these, the US dividend withholding tax, the UK stamp duty, will be taken from you automatically, either at the point when you're buying buying the shares, as the case is with the UK stamp duty. So it would just be part of the transaction. It will just go. You'll never see it. You'll never have to do anything about it. Or with the US dividend withholding tax, it would be taken off the dividends paid by US companies before the money ever reaches you. You don't have to fill in any paperwork. You don't have to send anything anywhere. You don't have to do absolutely anything. The money will be paid automatically. You won't ever see it. So that's the good bit. It's very, very easy. Question number 8. Do I need to open a new stocks and shares account every single year? I get asked this one, maybe the most out of all these questions. The answer is no. In fact, most investing companies won't even allow you to go and open more than one account with the same firm. However, you can keep the same stocks and shares ISA account for as long as you like with the same company, and every single financial year, so the moment the 6th of April starts, you can go and make use of the New Year's tax privileged amount of £20,000. So you can go and deposit £20,000 in one financial year, and when the next financial year starts, you can go and deposit another £20,000 into exactly the same account. You don't have to keep changing them. You don't have to open new ones. However, which brings us to question number 9. You can have more than one stocks and shares account. So a lot of people kind of get confused by those two. Now, technically, there's nothing really in the law stopping you from opening multiple different stocks and shares accounts in the same financial year. However, most of these companies, they will ask you some questions and they'll run some checks, and many of them will actually prevent you from doing it just to save you on the hassle of accidentally opening accounts that you can't then use. So in any one financial year, you are limited to making deposits to only one stocks and shares ISA. So you can't have two different ones, even if you've opened them in separate years and made deposits into both. If you accidentally do that, you will have to contact HMRC because one of those would be treated as a non-ISA account, and you'll have to do a lot of work with HMRC to for them to tell you which one it is, etc. You don't want to ever get into that. So make sure you only ever deposit into one stocks and shares ISA during the course of a single financial year. However, it is perfectly okay to keep your old stocks and shares ISA if you open a new one and begin depositing into that one. You can continue using your old one. You can continue selling some of your shares, buying new ones, keeping money as cash. You can do whatever you want with the investments that you've already made. The only rule is you can't put more money in through deposits. So you can have multiple different stocks and shares ISAs. You can go make trades and investment decisions in all of them. Just make sure that you only limit deposits. That's all I've got for you today. I hope you guys found this useful. If you have, please make sure you hit the like button so that more people can go and watch this video so that they can learn the answers to these simple questions. If you're interested in more content about personal finance, about investing, make sure you go and subscribe to this channel. That is exactly what I talk about in every single video. Thank you so much for watching. I really, really appreciate it. And as always, I'll see you guys later.